Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40. Welcome back, folks. We have the Dow trading up 50 right now. Nasdaq's up 2. S&Ps are up 4. And right now, folks, we have our man, Mr. Mike Richings. Mike is the CEO of Vista Gold, trades in the U.S. under the symbol VGZ. We happen to own Vista Gold. We've actually gone through many good years with Vista Gold, going right from when they were just accumulating strategic assets in 2002 to 6, monetizing ANV, and now we got our man Mike Richings back to tell us, how they're coming forward to be a producer. Mike Richings, welcome back to TFNN.
Tom, it's good to be back, and nice to talk to you again.
You too. I'll tell you, it's absolutely amazing. I mean, we've known each other for quite a while now. And, in the context of what you've done with Vista, it's pretty amazing. And what I mean by that, Mike, is this, and this is, it's wild because you can see, a lot of these gold equities haven't performed. And gold is at $1,500, and it's a mind blower. Do you know what I mean? People are like saying, "Well, what the heck is happening?" Now that hasn't happened with Vista, but tell us where Vista is now and what we're doing.
Tom, I got to disagree with you. I think that has happened to Vista. I think as I see where we're trading today,
okay,
I find it's very upsetting to me because listen, we just completed a transaction to end up owning 30% of a company called Midas Gold.
Yes.
We carried that investment on our books at about $80 million. That's about $1.13 a share. And that's
okay.
Based on a private placement valuation.
Right.
Midas Gold Corp has just filed a preliminary prospectus and anticipates doing an IPO here in the middle of late June, early July.
Yes.
And we've heard on the street they're marketing the story at about $3 a share. That would place the value of our investment at $90 to $100 million. That's $1.40 a share. Now, that's an asset that we paid about, we invested a total of about $1.4 million in.
Yes.
And none of that's reflected in the value of our stock.
Right. No, I understand what you're saying. I guess my point was we made so much money on the spinoff of ANV but I understand what you're saying. You're trading at $260 when, just that asset alone is worth $1.40. Right. No, I'm with you.
Exactly. And I mean, look, Tom, I'm really pleased that you bring up our history and point out the fact that we have made our shareholders a lot of money with the spinoff of Allied Nevada. But, I've got to worry about what we're doing for them now.
Yes.
And I think we've done an excellent transaction with the Midas transaction. Midas will be a great investment. We've held the investment in the company, on the company's balance sheet. And I think potentially they're going to do a lot better than this.
So let's talk about that a little. So let's if you can just go over that again for us, okay? So
we held a property called Yellow Pine on our books. It's in Idaho. We had resources of about 3 million ounces. These were drilled out by companies like Heckler and Barrick back in the 80s and early 90s.
Yes.
We purchased it from the landowner on a contract basis. We'd made about $700,000 or $800,000 worth of payments towards an ultimate purchase price of $1 million.
Okay.
Now, at the same time, another landowner held some adjacent properties that he had actually been making some fairly sizable investments in drilling and starting to demonstrate that there was a much bigger picture here. And this was a company called Midas Gold. They had managed to put together about 3 million ounces as well, but they held a very, very large exploration package surrounding us. So we negotiated for a couple of years, and we ended up with a transaction that we would own 35% of the company.
I see.
And this new company has a great CEO, a guy called Stephen Quinn, ex-Capstone Resources. And as a result, he's now taking that company public. Now, this company, this Midas Gold, potentially has exploration upside of between 10 and 12 million ounces.
Wow. Okay.
The major companies are showing a great deal of interest in it. And we, our strategy was to put our asset into Midas Gold to get the market premium
Yes.
that we would get in a public company, and maybe ultimately Midas Gold might be sold for a premium to a major company.
Sure. No, I get it. That's cool, man. No, and of course that's in the United States, so you're not going to have to worry about someone stealing your mine either.
No, and that's something that's very important these days. As you know, we've suffered greatly, and nobody's trying to steal it from us, but the effect is the same. We've suffered greatly in Mexico as we've tried to move forward and permit our Concordia project, which is a great project, which is why we continue to struggle with the permitting. It will make a lot of money for the company when it's permitted, but it's a long, slow process, and as you know better than anybody, the market doesn't like delays and uncertainty in timing. But we've continued forward with that effort, but in the meantime, we've brought to the forefront our major project, which is in the Northern Territory of Australia, where there's absolutely no uncertainty about permitting.
That's Mount Todd, right?
That's the Mount Todd project. 4 million ounces of reserves, 7.5 million ounces of resources. We hope to add to that this year. We're right now going through a new resource estimate, incorporating the drilling that we did last year.
Yes.
And we're also in the process of completing a feasibility study. This is a very large project, and that's even more frustrating to me because I think that while Mount Todd has some legacy issues that tend to have people discount the value of it. If they could look at the detailed work that we've done, I think that they would see that we've done all the studies to offset those legacy issues. And 4 million ounces of reserves, should be worth $400 million to us in market cap, $100 an ounce, something.
Yeah,
like that
big money. Mike, how did you end up in Australia?
Well, you remember our strategy of acquiring these out of the money deposits.
Yes.
We'd known about the Mount Todd deposit for a long time, and we've made a couple of journeys across there to try and buy it. But the key to that transaction was we bought it out of receivership, but the key to it was doing a deal actually with the Northern Territory government, whereby they were able to continue to hold the reclamation liability of this site while we were able to acquire the mineral leases under a contractual arrangement with them and advance the project. Nobody else had done that. Nobody else had taken the time and the trouble to work with the government and work out a deal.
Nice.
So that's how we got it.
And what is interesting, particularly in the United States, we don't see. Well, let's put it this way: there may be more companies that are doing business in Australia, but we don't. I don't particularly seem to see a lot of public companies that are traded in the United States that are doing business. So that's nice exposure, also.
It is. A lot of the. Some of the major companies are very active in Australia. Of course, Newmont and Barrick are active in Australia, and Newcrest, which is an Australian company, is listed in the U.S.
Yes.
But no, there aren't many companies there, and it's good to have a U.S. listing. We're not. We don't have a lot of Australian investors in the stock, but I think that will come as we start to get increased valuation, increased attention to the Mount Todd project. Now
on your website, and folks, don't forget, this is going to be under Tiger TV, and there's a full presentation that goes with this. You have the simplified process flow sheet. What exactly am I looking at there?
Well, Tom, there are a number of issues that this was a project that was operated by a company called Pegasus Gold in the mid-'90s.
Oh, yeah, I remember that, yes.
It was a very spectacular financial failure, operational and financial failure. So we had to put in a lot of time and test work to find, one, a process that would work, and two, understand it properly so that we could convince future investors, which obviously we haven't done fully yet, that we had solved all the technical problems.
Right.
The flow sheet we've ended up is very, very simple. It involves crushing and then fine crushing with a technology called high-pressure grinding rolls. Now, this has been proven and is functioning well with Newmont at their Boddington deposit in Australia, which is a hard ore also. Now, the ore at Mount Todd is very hard, but the combination of this technology plus a slightly coarser grind results in an energy saving compared to the original developer's process of about 40%. So that's a major, major change. But not only that, the flow sheet that we've developed, which just dealing with the front part of it now, which is crushing and grinding, is a simple, straightforward circuit that will be very easy to maintain, very easy to operate, which is a completely different flow sheet from what was used in the past, which was very complicated, didn't function very well, and was very expensive to operate. Now, secondly, the second part of the flow sheet is just the same as in almost every other gold project in the world. It involves grinding the ore fine and then putting in the slurry in tanks, putting cyanide solution in there, dissolving the gold, electrowinning the gold, eventually after another concentration step, taking the waste from that, putting it into tailings ponds. But as we do it, we will destroy the cyanide so that it doesn't damage the environment, but more importantly, doesn't cause us potential processing problems. And it's a very simple, straightforward circuit that should enable us to produce in excess of 250,000 ounces of gold a year from a project that will have a life of about 14 years.
That's a long lifetime. Now, that's where, it's interesting is that I guess, I get this question asked many times about, how much metals are around. I says, you know what, folks, there's plenty of metal around. The real question is that can you get it out of the ground at a reasonable price, right?
John, Tom, you've got to look at a report that was just put out by Standard Chartered. That's exactly the subject that they're talking about here. I mean, these are one of the premier brokers in the UK dealing in gold investment, and they're talking about, because of the potential shortage of reserves, the potential problem that all companies are going to have meet production requirements in the future, that they're forecasting a gold price of $5,000. Now, this is not some, small company that's doing this. This is one of the long-term experts in gold mining and gold financing. They lend money to companies to build projects, so they're very closely involved with the project financing, and they're looking at a long-term gold price of $5,000 an ounce. Now, our assets eventually, regardless of what the market does in the short term, in the end, our assets are going to shine through, and we're going to show the value in our stock as a result of that.
You have an amazing amount of assets. There's no doubt about it. And
Tom, we have that other project that we've just started exploration on in Mexico called Guadalupe de los Reyes. It's in a completely different state from Concordia. It's in Sinaloa.
Okay.
They've been very, very helpful to us. And one of the things that is completely underappreciated, maybe even underappreciated by us, is that we've got almost 17 million ounces of silver in this resource. We've got 800,000 ounces of gold, nice grade gold, between 1.5 and 2 grams of gold. But we've got 17 million ounces of silver in the indicated and inferred category, with grades from 25 grams to 60 grams, which is almost 2 ounces a ton. We're just starting the exploration program on this, and I think this is our next major project.
Big numbers, absolutely big numbers. And folks, okay, the symbol, the company first off is Vista Gold. We happen to own it. We've owned it for quite a while. The symbol's VGZ. Now, don't forget, this is going to be under Tiger TV. It's going to be on channel number 2. You can see the whole, not only the interview, but you're going to see we're going to put the presentation up with it. Mike Richings, it's always a pleasure, and, you know, you're working your butt off in a big way, but you got the cylinders going, you know. Now, you know, bottom line, we know how this goes. It's a patience game, and you got the cylinders going. Thank you so much. You have a great one.